I feel, yeah, the bear is actually, it's the easy time to make money.
But Bitcoin right now is more or less more correlated to the US stock markets. And given that we're still at a high rate environment, once we get rate cut next year, we're going to see another bull cycle coming on.
For all these family offices from Web2 industry, do you think there's a increasing demand? Obviously we see a demand for holding Bitcoins,
right now,
but
investing in crypto stock could be a more tempting thing compared to before.
Okay, so welcome to our the Round Trip podcast for today's episode. So we're joined by Jason Huang. As you can see here, he is the founding partner of NextGen Digital Ventures, NDV, with over a decade in venture capital at firms like Huaxin Capital, Qiming, and Blue Pool Capital. Which is the family office co-founded by Jack Ma and Joseph Tsai. Jason left traditional finance in 2022 to launch NDV, which is a crypto equity fund connecting institutional investors with the digital asset world. Well, let's dive in today into Jason's journey.
Yeah, welcome to
Thanks
the podcast.
Yeah.
Thanks for having me.
Yeah, so, you left to join crypto in an interesting time because it was kind of like the end of the bull market, and then you've gone into the bear, and maybe we're in a bear again. Tell me, do you regret your decision?
Well, definitely not. So, well, first of all, I think in bear market, there's always a good timing to invest. That's actually when I started NDV. We were pretty lucky that we launched our first fund in March 2023. Back then, Bitcoin was at around, 30K or something. And then we liquidated our first fund February this year before the Liberation Day. So we kind of, our first fund actually did pretty well. We delivered around close to 4x return to our initial investors. And it's mostly crypto related equities. I think right now it's a bit different from where I started. Back then, I need to convince my client telling them that crypto is something that you should be owning, like maybe 1% or something. But right now, I think after the ETF has passed, a lot of institutional interest has gone up. Right now, we are only talking about the percentage that they should be allocating into crypto. So I think it's a lot different. And yeah.
Yeah, I was wondering, what's that percentage now, and has it changed over the last few months?
I would say, so I think, so I live in Asia. So in Asia, in terms of crypto allocations, people are highly underrated. So we're still at early stage. Most of the people I talk to, they have less than 1% of their allocation. And right now I'm talking to them maybe about 5%. I think that would be a more conservative and balanced allocation for them.
Well, since earlier this year, we all know that Bitcoin has dropped more than 30% to a point. With a retrace, we're wondering how's the Web2 investors viewing crypto, the entire blockchain as an investment? Are they still interested, or are they do they think it's a risky asset that they want to maybe reduce their positions? What's the Web2's view on this?
I think it differs. So if people has gone in this year, obviously I think most of the people should have some kind of drawdown. They would still keep their position, but if you ask them to add more, maybe they would be a little bit conservative given what happened in the past 2 months. But for people who hasn't made any allocation, I think people are pretty interested in adding in more. So my 2 cents on the market right now, a lot of people are worried about the 4-year cycle that has consistently happened in the past, the 4 cycles. But my view is that we are not going to get a 4-year cycle anymore. So in the past, the new issuance of Bitcoin gets happened every 4 years. But this cycle we are in, so 90 million of Bitcoin has already issued. And for this 4-year cycle, only 620K-ish of Bitcoin is going to get new issued. This selling pressure is not that much compared to the inflows of ETF we have seen in the past 4 years. So I think Bitcoin right now, it's more or less more correlated to the US stock market. And given that we're still at a high rate environment, once we get rate cut next year, we're going to see another bull cycle coming on. So I'm pretty bullish right now.
Okay, so you are bullish because, if you take a step back, I'm in crypto full time. But you're why am I taking on this much risk if it's, correlated to the US stock market? I have a lot lower risk just investing in AI. Like,
Are you sure? So if you look at like macroly across different asset class, Bitcoin could be the only thing that's performing negatively this year. I was joking about that we underperform even A-shares this year. So this is something pretty abnormal for Bitcoin, because if you look at how Bitcoin has performed in the past maybe 12 years, they were the top performing assets in almost like 9 years out of 12. So I think we are already in the bear market, and it has already relatively underperformed. So potentially we should get a catch up next year. That's how I'm thinking about it. And in terms of AI, I just don't know. I mean, I was looking at Michael Burry's interview this morning, and I saw him talking about Palantir, and I just did a quick research on like its PE. It's like 800x PE. I mean, how is that undervalued in any way?
Yeah, but like if you look at NVIDIA, it's not that high, the PE. And then I guess, we always say like, oh yeah, how's the Web 2 investors? But I feel like Asian investors, they're more traditional. They're not even like Web 1, they like investing in property. So it's kind of a big leap for them. Or I don't know, like, what do you think? They love like kind of like the Warren Buffett kind of style. Like we like businesses that make money kind of thing, where crypto doesn't make money for the most part, especially this year.
I think there's nothing wrong with that, and I wouldn't just categorize like Asian investor as one group. So what you were talking about, the traditional real estate families, sure, right? They like things that they can touch. They like things that creates some kind of yield, but they're also in some kind of trouble. So mostly the family offices that I talk to is like Chinese tech family offices. They came from a world that they made money from things with network effect, and there's nothing else other than Bitcoin that has that kind of network effect. And it could be the most popular app maybe in the next 10, 20 years, because it's something that everyone would own some percentage of. So I think mostly if we look at the buyers in different layers, the buyers coming in right now are the tech family offices, at least in Asia. That's how I view.
Yeah, okay. All right. Because it seemed, I don't know, because you want to say follow up?
Yes, a follow-up question is like for all these family offices from Web 2 industry, like do you think there's a increasing demand? Like obviously we see a demand for holding Bitcoins, but do you see like an upcoming increase in demand for Bitcoin, for holding Bitcoins at this point?
So sorry, are you asking about Bitcoin or altcoins? I just want to clarify. Okay, purely Bitcoin itself, I think by now everyone realizes that the US government is just gonna keep on printing money. So gold and Bitcoin is definitely a beneficiary from that. This is something no doubt. The understanding of and acceptance of crypto, I think that's still a half question mark. It's not a question mark for me. I feel the exchanges and stablecoins, they are the real business in crypto. So for people who invest in tech stock, it's not difficult for them to understand that. And we are still at the early stage of penetration for investments like these. But as a first step, I think right now, I think people around me, at least 80% of them, they would appreciate the value of Bitcoin as storage of value.
Yeah. But at the same time, gold, kind of diverged.
Well, I do agree with the fact. That's why that I was talking about the 4-year cycle already happened. The sell-off from OGs, the switch hand from the long-term BTC holding address, they already sold. And right now we're stabilizing and in the process of rebounding. That's how I'm seeing this. Okay. So that's why that's actually partially why that I'm bullish next year, at least the first half.
Usually, like in the 4-year cycle, the bear is 3 years. So you think we have like this condensed bear market now?
Are you sure? So from what I've seen, I've studied,
it's a long, like it feels very painful. It feels like 3 years. Maybe it's not, but it's
so looking for
maybe it's sideways, whatever you want to call it. It's definitely not a bull for 3 of 4.
So the way that I understand Bitcoin, the way that I studied it, usually you get maybe a 70 to 80% drop from peak. It happens within 1 year, meaning that if it drops 50% and you get in, you get another 50% drop. That's why that is painful. But usually it happens very quickly, relatively to other asset class. And then it would go all the way up in the 3 years after it reaches its bottom. And then it will go up maybe 5 to 10x. That's how it has performed consistently in the past 12 years. At least the past 12 years has the record. And the way that I think about it is that because that there's so much liquidity out there for all kinds of assets, the fact that Bitcoin has underperformed relatively to gold means that the bear market already happens. So that's how I'm seeing this.
So wait, no 75% drawdown? Because I mean, if you look peak to peak, last cycle was 69K. We didn't even 2x. It was like 125, 126, and that was just happened.
Yes.
October.
I think a few things happened. So this cycle, one of the most important structural change for this sector was the Bitcoin ETF. It was the first time that institutional buyers can come in and buy it. That actually caused a few things. One is Bitcoin become much more stabilized because there are more institutional investors. They have the channel to buy it. Secondly, there's no inflow into altcoins because the ETF is a one-way street to Bitcoin. So we are not seeing any altcoin seasons anymore because institutional investors, they don't like things with no cash flow and not that much of intrinsic value. So I think that actually caused Bitcoin to become more stabilized. And secondly, if you look at the Bitcoin mining cost, right now it should be around 70 to 80K. I'm not saying that it cannot drop under the mining cost, but it's a strong psychological sustain point for the Bitcoin prices. And many institutional buyers should be referring to the mining cost as their entry price. That's why it's getting a bit hard to drop below that. That's how I'm thinking about it.
Yeah.
But do you think Bitcoin is still going to perform like in the past 2x, 3x, 4x, 5x after the bear market? Because right now we have so many institutional players in the market. They actually hold like a majority of the Bitcoin. Then like how is the Bitcoin prices going to profit from this?
So I think in the past, Bitcoin can went up 5, 10x. It's partially because of leverage as well. The exchanges, they would provide all kinds of leverages to individuals. When you get a lot of people shorting it, it becomes some of the dry powder when they get wiped out. So that's partially why the Bitcoin price is so volatile. But right now, given that I think ETF is taking over most of the BTC trading volume, so it would become harder for it to pump like that in the past. So I think a lot of people talked about whether or not you can beat the performance of Bitcoin. Our first fund actually outperformed Bitcoin by around 60, 70%. I think that's partially why. I think it's because that we bet on things that has value and it has like a PE multiple. And when you are in an expansion cycle, PE multiple would outperform, would increase. And then when you get the net income, you get a classic. You will get the end result that's like outperforming Bitcoin. Right now, investing in crypto stock could be a more tempting thing compared to before.
Yeah. So you're kind of big on this, like investing in the crypto stocks like DATs and whatnot. But what happens like if it all unwinds? You know, I think MicroStrategy, they already kind of signaled that, hey, if it drops below NAV, we have to sell some Bitcoin and buy some shares back. Like if that happens, I think there's a huge loss in confidence within the whole market. And then other investors for other DATs are going to be like, oh, Sailor sold. Now we have to sell. Like, oh, it's, shit hit the fan.
That could be one of the systematic risk within the ecosystem right now. But I think it's going to be okay. So first of all, I will separate MicroStrategy compared to the other DATs. And if you look at MicroStrategy's recent filing, they've prepared 1.4 billion the cash to pay off the debt payers, the debt sellers, to pay off the interest. So that would get them maybe 21 months of leeway, and they are going to prepare maybe like 24 months as they disclose. So I feel that would ease the pressure of Bitcoin in the short run. And if we look at other DATs, I don't really like them as an investment target when they are in premium, because you get the same kind of exposure if you invest into ETH ETF. The only difference between the DATs of ETH compared to the ETFs is that they can do staking. That's for me is kind of like a regulation arbitrage, and you get extra dividends out of it. I think at the normal time they would get a little bit of premium because they can do the staking, but they shouldn't get too much. So right now, I think most of the DATs are trading at maybe 20 to 30% discount. Right now, it could be a time for us to do some kind of arbitrage. But that's all. In general, I don't really like ETH as a theme. I prefer things like Coinbase. So if you think about ETH as a stock, and you think about the gas fees as some kind of net income, it's trading at more than 100x. So it's kind of like Palantir in the AI world as well. So I would prefer like crypto stocks rather than ETH itself.
Yeah, but I mean, you can't value Palantir like a blockchain because it's not a network. It's not housing like billions and billions of TVL. So yeah, I don't buy the whole like it's not apples to apples, the comparison. But yeah, interesting to know like what is more of your thesis for this new fund, like fund two. Are you approaching it differently? Because like I feel the bear is actually it's the easy time to make money. Things are slow. You could think clearly. Yeah, I think it's a lot easier. So when everything is kind of going down, like at least in this first part of the bear, and you're trying to make money, you could end up doing the wrong thing. So what's the strategy?
So we are generally longing things that we feel is undervalued. And I cannot talk about specific like listed targets, but recently we did a chunk into Upbit, the largest Korean exchange out there. So this company is valued at around 10 billion US dollars. And in 2024, they made more than 700 million in net income and gave out 200 million in dividends. This is something classically I would like. So if you look at the exchanges that's trading globally, if they have real net incomes, it's usually trading at 30 to maybe 60, 70x-ish. But this one is trading at 15. And it's one of the top 5 exchanges in the world. It's fully regulated. It's audited by Korean PwC. So I think this is the classic things that I would like personally. Our fund started by investing into GBTC at a discount earlier when we launched our fund. So I view investing in Upbit as the GBTC 2.0 for us, that we are investing in Coinbase-like business at a discount as well. So that's an example of things that we like.
Yeah.
Well, as more crypto exchanges, they look to go public and get acquired by listed companies, like what's going on with Upbit right now. Like, how should we think about valuing exchanges today? What are the key metrics or frameworks to you? Like, how do you assess their fair valuation? If 10 billion to you is seem as like if picking up free money for you as an investment, then what's the correct valuation that we should look at?
So I think there are a few things. First of all, as a pure exchange, you can always compare them in terms of PE, trading volume, user base. If we think a little bit more aggressively, exchange is actually the only thing that users would have as an app to keep on their cell phones. I see this more or less as a gateway for generating users, and they can expand from there. Let's take Upbit as an example. Recently, they merged with the Google Pay of Korea. It's the subsidiary company of Naver, which is the Google plus Amazon in Korea. After the merge, you could see they are going to launch the first Korean stablecoin. And I view this as more or less they are penetrating into users' all the financial needs using a very differentiated move. So I think you can see Robinhood as an exchange getting into crypto, they're getting into prediction market. I think all the financial world is going to get reshaped by crypto. So anyone who can adopt crypto earlier and trying to become maybe a conglomerate in like finance sector could be very promising. And we are only at the beginning of this. So yeah, I mean, as an investment, just get in at a cheap PE and then maybe think about the potential upside if you can. And I think we're still early at the evolution of the exchanges. And people who can execute their strategy well enough would gain like better upsides.
Yeah. Value investing, the old
value investing first and then dream. That's the way that I'm thinking about this.
Okay, yeah, makes a ton of sense. I guess that's like, kind of like you seem like more of a disciplined investor. Maybe you get that from the TradeFi, but yeah, like crypto investors love the leverage, as you mentioned.
Oh yeah, but I think there are three things that's definitely gonna kill you in crypto: leverages, custody, and also altcoins. So if we
the 3 L's from Warren Buffett and liquor, which play a big role in crypto, especially during conferences.
Well, I totally agree. So that's actually partially why I don't really go to these conferences anymore. But yeah, I think if we can avoid all three of that, you will become like the top 10% investors in crypto. So as Charlie Munger says, stay away from the things that can kill you. So I found these three things most toxic. I try to keep away from them.
All right, you make it sound easy.
Yeah.
But yeah, I think going forward, it's kind of like, did you beat the Nasdaq or did you beat Bitcoin? It's kind of like how you view yourself as a good investor.
Yep. Agree. Totally agree. I think that's all what all fund managers should think about, or else they don't deserve the fee and carry that they get paid.
Exactly. Like, did you beat Bitcoin? Why am I giving you my money?
Oh, well, we did pretty well in the first. We did beat Bitcoin by around 60-70%. So yeah, let's hope that we can keep it. Keep
Well, how's the fund doing right now with the Bitcoin prices retracing?
So we had a bit of drawdown in the last week, but in general, we are still outperforming Bitcoin. So, but I'm pretty bullish of the Bitcoin prices like in the coming year. So I think we're going to get a rebound soon.
Yeah. Any last words or kind of
last words?
Your outlook for 2026, besides the fact that you think it's going to be good for Bitcoin. Do you think maybe some of that like draws over into alts? Or I know you're not an alt fan, but does it happen? I felt like alts did well in the first part of the cycle. But yeah, as the ETF came, more of that money flowed into, just Bitcoin, maybe some into ETH, like post July. And yeah, in past cycles, I felt all the assets were kind of priced in Bitcoin and ETH. So if Bitcoin ETH went up, of course, this asset went up because it's just priced in that.
So I think there's one particular sector that I'm personally very interested in. What's the penetration of stablecoin? I think there will be a lot of changes in the financial world because of that. I view stablecoin as an upgrade version of banks. So when you get like all the payment tunnel and banks getting upgraded, it's kind of like the whole network, the trading cost of the whole network gets lowered. So personally, I'm particularly interested in Polymarket and all these maybe new trading platforms that's going to rise together with the stablecoins. I think there will be a lot of innovations out there. Maybe RWA, maybe some other things. Maybe we can see a new Stripe in crypto as well, given that many people own crypto right now and people would like to pay through stablecoins and stuff. So I think there are a lot of developments that's going to come in the fintech sector, and a lot of innovations going on. And these things are different from the altcoins that we've seen in the past, maybe 3-4 years. It's not entirely just meme. It's gonna create some utilities, and that's something real. And yeah, this area I'm particularly bullish about, but we'll need to wait for these companies to go IPO and stuff.
Yeah, especially Stripe, because Stripe could be the Stripe of crypto. And then yeah, if you got like Forex liquidity on chain, that'd be huge. Forex traders they trade trillions. Yeah.
Yep. Cool. And I think that there will be like a lot of new categories getting developed because of crypto.
Like what?
I'll save that for next time. It's something that we've been working on like recently. So yeah, I'll save that for next time when we have the true product launching.
All right, we'll make sure to follow NDV. Thanks for joining, Jason. Really appreciate it.
Thank you for having me.
All right.
Thanks for your time.